Good afternoon, ladies and gentlemen. My name is Alex Bradford. I'm an English solicitor and Spanish lawyer with My Lawyer in Spain. And today, Miriam is joining me from MDG Advisors and Accountants. Hello, Miriam. How are you?
Hi, Alex. Very well, and you?
I'm very good, thank you. Very good, thank you. Miriam, can you just tell me a bit about yourself and about your company, please?
Yes, I'm partner director of MDG Advisors. We are a tax and accounting firm, and we specialize in international investors with interest in Spain, mainly in the area of Malaga, Costa del Sol, but also Ibiza, Canary Islands, and all touristic destinations. And we've been in practice for the last 12 years, helping our clients, and I'm here to also help your clients, Alex.
Oh, that's great. So thank you very much. So we're gonna today, Miriam, we're gonna be talking about English companies, and because we get contacted a lot by clients who have got monies in an English company in the UK, and they want to know, can they buy a Spanish property? They would like to rent it out for holiday lets and also use it. And they look at properties basically in the mainland and the Canaries. So when we talk to them, we say, look, the simple answer is yes, an English company can buy a Spanish property. However, the more complicated question, which you're going to consider with you today, is one, whether you should buy the Spanish property in the name of an English company. So should the English company own it? Two, incorporate a Spanish limited company and the shares in that company are owned by the English company. Or three, incorporate a Spanish company and the English company loans money to the Spanish company to buy a property. So basically, Miriam, if you could let's just start. What are the advantages of buying it in the name of it? What is the advantage of buying a Spanish property in the name of an English company?
Okay. So that was a long question and many things in it. Okay. So to your first question, yes, you can buy a property in Spain through a British company. Are we advising that these days? Not truly. Okay. Let's start with this. Okay. Traditionally, and back in the day, it was very usual to see British companies buying properties in Spain. And that's a structure that we tax advisors were recommending for a long period. But after Brexit, truly everything has changed. First of all, because British companies, entities, are no longer European entities from a Spanish point of view. And that's completely changed our picture. Right now, if you buy a property with the intention of renting it out, or even just to have it at your disposal, the Spanish tax authorities will charge 24% on your rental. And that means on your gross rental, because you're not allowed to deduct any expense. And I'm saying in both situations, because either if you rent out the property, you're going to be taxed 24% as a non-European company, and you will not be able to deduct any cost at all. But what's worse, if you just have the property at your disposal, the Spanish tax authorities will calculate a deemed rent based on the market value of the property and also apply 24% on that, and they will not allow you to deduct any cost.
So let me just stop you there. So basically, the 24% tax rate doesn't sound so bad, but when you add to the fact that I can't make any deductions, that's not good. So
Absolutely.
Because typically cost could be 20-25% of managing a rental property.
At least, yes.
At least, and then secondly, if I didn't rent it out, I'm still going to get taxed the market rate of the property for the whole year, and pay 24% on that. So that's a lot of money. Yeah,
that's correct. If we're looking at the other option of buying, like having a British company and Spanish company underneath, that actually buys the property in Spain. As you said, we're also looking at a corporation tax rate of 25%, which is not a big difference. Big difference is about the cost, that you cannot deduct cost. And this affects all sorts and all prices, but especially for big and important properties when depreciation is 2% and there's so many costs involved in the maintenance of the property.
Yeah. So Miriam, and then the other option that could be, so basically, someone just incorporates a Spanish company, and then the Spanish company buys the property, and the English company loans the monies to the Spanish companies. Is that similar to the second option that we talked about?
Well, you're asking about the convenience of establishing that as a finance instrument?
Yes.
Yes, I mean, having a loan between the British company on top and its daughter, the Spanish company, is an option we use frequently, okay? Because it's quite flexible vehicle, both to transfer the money into Spain and also to draw it back. I don't know if that's
correct. So basically, what I'm reading, what I'm understanding from you saying, so the most efficient tax structure is not the English company, but it could be either the English company owning the shares in the Spanish company, or a standalone Spanish company, and the English company loans monies to the Spanish company.
Yes, well, as I told you before, there's so many structures, so many types of clients and operations. So giving you a straight conclusion is not an easy thing. Yeah. But yes, in general, we're not advising British companies to buy properties if they are thinking about maintaining the property. Okay? And the way of financing these Spanish companies that are created mainly to buy a property in Spain through a loan is something we frequently advise.
Okay.
Because you put the money into the company and you can take it off without paying taxes. You just pay taxes on the interest, but not on the principal.
So basically, so again, whichever structure you go down, it's always worth putting in place the loan agreement, because that's in effect what is happening. The English company is loaning the monies to a Spanish company. So, and you're right. Each client is different. Each personal circumstances are different. But generally speaking, it's quicker to incorporate a Spanish company and have a loan agreement between the English company and the Spanish one. What would you say is the main difference, or is there a difference between having the English company owning the shares in the Spanish company compared to the loan agreement in place?
Well, the main difference in that is flexibility. Okay, if you establish, let's say you're buying a property of 200K. Okay, so we have two options here. The English company owns the shares of a value of 200K, Spanish company that buys a property, or the English company owns a company with a minimum social capital that could be 3,000 euros and lends the rest, 297, through a loan. Okay, what's the difference in that? I think that's your question, right?
Yes.
Well, in terms of cost, it's a lot cheaper to create an Spanish SL company with a social capital of 3,000 euros rather than 200,000. Okay, right. One thing. When you want to liquidate that company, it's a lot cheaper as well to liquidate a smaller company with a social capital of 3,000 than with 200,000. And also in terms of taxes, can be beneficial, because if you want to get some rental income through the property in Spain and transfer it back to your company in the UK, where you are a resident or where you main business are, you still have 200K to be paid back to the British company without paying any taxes. Whether on the other case, you pay taxes for the first euro.
Okay. Okay. So, and really, yeah. So
But
so we're leaning towards Spanish standalone company, share capital of 3,000, and then a loan agreement in
yes,
place.
but again, Alex, as I told you, it depends on the case, because we find many clients that want to ask for external finance, for instance. And for banks, it's a lot more attractive to give a mortgage to a company that has a bigger social capital, or for any other reasons, if they have private investors, or, so I can tell you from a tax point of view, normally it's cheaper to do it with a smaller structure, okay?
Okay.
And cheaper, but again, it depends on the case.
Okay, that's great. Okay, so Miriam, what costs would a client have to pay an accountant to look after his company, bearing in mind he, say, rented out 30 or 40 weeks a year?
Yes, well, it will depend on a lot of factors. The turnover of the company, the value of the property, numbers of shareholders, etc. But to give you an idea of, if we are talking about a shareholder company with just a property underneath, we could be looking at the figures between 1,800 to 2,500 per year.
Okay, that's great. Thank you. If I rent the property out, what taxes do I have to pay?
You mean through a Spanish company?
Yeah, through the Spanish company, yeah.
Yes. If you rent a property that is a home, there is no VAT involved. So you will not have to pay VAT, and you will pay just 25% corporation tax on the profit.
Okay.
Meaning that you have as an income the rental, and you can deduct all expenses related and necessary to rent out that property.
Okay.
Community fees, local taxes, depreciation at 2%, etc.
So basically all the costs proportional to the rental. So if I rented it for 12 months a year, then all the costs of running the property, community fees, water, electric, etc., I would do that. Generally, if you're renting it for that long amount of time, then I'd recommend the tenant pays the water and community. But if it's holiday rentals, we can't really charge that separately, but that would be a deductible expense.
That's correct.
And if I have a mortgage, Miriam, is the interest on the mortgage deductible?
Yes, you can deduct also the interest of the mortgage.
Okay, that's great. And if I wanted to redecorate and refurbish the property, are those costs deductible?
Well, that would be considered as a value added to the main value of the property. So we will put it in the, let's say, balance sheet of the company, and you will be able to apply depreciation at 2% per year.
Okay. Okay. Yeah, I've had that recently. We've spent some money on the office, doing the office up, and if we renewed something, that's not totally deductible. It goes into the depreciation.
Yeah, it's
column.
something important because some clients are not aware, and by the end of the year they start doing some construction works or buying new properties, and at the end of the day they cannot deduct the
Exactly.
full of that.
Yeah. So we found that. So only items that were replaced or could be fixed.
Yes, like what we call maintenance work.
Maintenance work was that. Yeah. So basically, a brand new kitchen, brand new bathroom would go down into the depreciation.
That's correct. Yeah.
2%. Yeah. Okay. That's great. And if I want to use the property, so basically, again, I'm an English person living in the UK, and the property's owned by a Spanish company, and I want to go over and use the property for holiday purposes, or just to kind of look at the property and make sure it's okay. Do I have to pay to use the property?
Yes, absolutely. And in Spain, we have what we what is called a transfer pricing regulation that established a minimum market price for operations between related parties. And in this case, the related parties will be the company as an entity itself and the owner of the company as an individual. So all operations between both sides will have to keep a market value, and the ultimate owner of the structure will have to pay a rent to use the property.
Okay. And for example, though, management time, can I deduct management time?
It's not frequently done, okay? If you're a self-employed and you truly work on that, you could send an invoice to the company, but not just applying a figure and deducting. We will need an official and proper invoice to apply that deduction. It's not something that we frequently see.
Okay. Okay. And let's say, Miriam, I rent the property out successfully. I've built up, some cash in the Spanish company, and I want to receive that money. So I want to kind of pay myself or the English company a dividend. What tax would I pay on those dividends?
Well, here it depends again if we have a Spanish company and an individual on top, or if we have a Spanish company and a British company on top. According to that, we will have to go to the double tax treaty between Spain and the United Kingdom. In this case, what is established is that you can pay dividends from Spain, from two companies, right?
Yeah.
From Spain to the United Kingdom without paying any taxes in Spain. So there's no tax involved for dividends between companies.
Right. Okay.
If we had the situation whether you have a Spanish limited company and an individual on top that is a British citizen, in that case, with the dividends distribution, we will have to apply 10% retention and pay 10% taxes here in Spain.
Okay, so
that is the taxes that the individual should pay abroad in the United Kingdom.
So that possibly, Miriam, could be another advantage for actually the English company owning the shares in the Spanish limited company, because in effect you'd pay corporation tax at 25%, and then you could, any surplus monies you can transfer back to England, and then they would be subject to dividend tax.
It is a very flexible structure. Yes, you're right.
Yeah. Okay, that's good. Okay, and if I wanted to reinvest the Euro rental money generated by the company, so I get to the end of the year, I've got 100,000 euros in my account, and I've seen a property or garage or something. I want to buy something else. Can I reinvest that money into that new company and into the new property?
Of course you can. Of course you can. But as we referred before to the construction works, there's not a special tax bonification. You will add that price, the price of the new property, to the balance sheet of the company, and you will be able to deduct the cost through the depreciation at 2%.
Right. Okay.
But there's not the option of saving corporation tax of the year through that as a special bonification, if that's what you mean.
Yes. So in effect, let's just say I've got 100,000 euro profit, and I reinvest that into another property. I'm not going to be able to deduct the whole 100,000 euros. I can only deduct 2% per year.
That's correct. Yeah.
So on that 100,000 euros, Miriam, I would end up paying corporation tax at 25%.
25%. Yeah.
Okay, that's fine. And ultimately, so this is going well. And
at the end, sorry, Alex, you are under the umbrella of a company, and basically you have all your incomes and expenses. We calculate the result and apply corporation tax on that, but reinvesting profit will not excuse you to pay the corporation tax.
Yeah. And if I wanted to pay myself a salary, Miriam, is that possible?
Yes. I mean, Here in Spain, and I think worldwide, in terms of taxes, we should prove that what we are doing has an economic reason, okay? That we are not just using tools to minimize the tax impact. Having said that, you can pay a salary if the workload needed to do the rental activity requires to have a person working on that. So, for instance, if you have 100K apartment, 30 meters apartment in Costa del Sol, probably you don't need to pay a salary of 2K monthly to anyone. So
Yeah.
just let's be reasonable. If you know what I mean. If you
Yeah.
have 10 apartments, probably yes, you need someone to work on that to produce the rental income. So we just have to make sure that what we are showing tax-wise is has an economic reason.
Yeah, and we have to be reasonable and fair and not abuse the system.
Exactly. We have to be fair with the system, and the system will be fair to you. You know how the Spanish tax authorities can be very aggressive. So what is important is that we do things properly.
Absolutely, absolutely, and take proper advice up front, which is always important.
Absolutely.
So now we're coming to the end of our kind of chat. You know, I've now become quite old, and I want to sell the property. Okay, upon the sale of the property, I've made a gain. So I know what taxes would be payable, Miriam, when I sell the property.
Again, since we are under the umbrella of the same company, the Spanish SL company, you will pay 25% on the profit of the year, okay? Right. And that will include also the capital gain on the selling of the property. And with this question, that is a very good question, I go back to the structure of having the British company and directly the property in Spain.
Yeah.
Okay, because in that case, there could be the option where it's more beneficial to have the property under the British company because you just pay 19%. So if you have the case of, I'm going to buy this property and sell it in a month because I have this great business to be done, probably it's good to do it directly with the British company. Right. So that's why, you know, you always have, we as tax advisors, we always have to study each case because although here we are here to give a general idea and to help people clarify a bit more their ideas, but truly each case has to be analyzed. Yeah,
no, I appreciate that. I appreciate that. So in effect though, so we sell the property, let's just say I make a gain, so I'll pay tax in Spain on that at the rate of 19%?
Yes, no, what do you mean, with the British company or with
so yes, so the if an English company owned the property and sold, then they're going to pay 19% tax. 19%. Yeah? But we're not going to recommend that structure for the reasons we talked about, because basically the rental costs aren't deductible, and it just doesn't seem as flexible.
It will be just a case where you buy the property and sell it in a very, very short time period.
Yeah. So, but if I've bought the property, I've rented it out, and after say 10 years, I've decided now I want to sell, and I'm making some money when I sell the Spanish. The Spanish company will sell the property. So the Spanish company agrees to sell the property, and I make a gain. Do I pay 25% on that?
That's correct. 25% corporation tax.
Okay. And then if the English company had sold, it would be 19%. But obviously all the costs aren't deductible over those years. That's fine.
That's correct.
And then so the company.
We have here two tax rates, 19% and 25%. Main difference in general is the cost.
Yeah, the annual costs, which are deductible or not. And then Miriam, so the Spanish company sold the property. I've got the money in my Spanish company, and if I've got the structure that we talked about, where the English company is the shareholder in the Spanish SL, then I can just transfer the money straight
Well,
to England.
it will also, again, depends on the situation. If you have a loan in place, still a loan in place in the company, first thing you will have to do is to pay back the loan. Okay, so for that amount of money, you will pay no taxes.
Yeah.
Okay, because it's just paying off. Okay,
Yeah.
you just have to pay taxes on the interest on the financial profit, and
Yeah.
for the rest, you will have to either distribute it as a dividend. Okay, in that case, you will pay no taxes in Spain because, as we said before, according to the double tax treaty between United Kingdom and Spain, the Spanish tax authorities cannot apply any taxes on the dividends here in Spain. Or there is also the option of just liquidating the company.
Okay, we're gonna. I mean, basically, I think what we'd want to do is get the money out of the Spanish company, repatriate that to England or Wales or Scotland or Northern Ireland, and then dissolve the company.
Yes, that's the most usual operation.
Okay, Miriam, that concludes all the questions I've got for you, and I'm really grateful for the answers that you've given. Have you got any other comments to make?
No, just that before you thinking about coming to Spain, make sure you have a great lawyer as yourself.
Thank you
And
very much.
it's very important to have also a good tax advisor to prevent you having a nightmare instead of a dream house in the sun.
Yeah, absolutely. I agree. I agree with that. It's important. It's important to take advice from professionals, not barroom accountants or lawyers. Yes, you're going to pay for that advice, but it will be good advice in the long run. And each case has to be analysed on its own merits, as we've discussed. Miriam, thank you very much, and I'll see you soon.
Thank you always. Bye, Alex. Thank you.
Bye bye.